And you look at some of the recent data, the fact that housing looks to be picking back up again, the growth figures are pretty.
All right, we have more changes unfolding in the U.S. economy and the U.S. housing market. Changes that had a remarkable CPI print coming off the presses for last month. A CPI print that just marked the largest spike to overall inflation coming from the housing sector specifically. An absolute giant number, which we're going to look at together in a minute, and we'll look at where this is coming from, what is causing this, and the specific contributing factor pushing rising housing prices and shelter prices or price growth, and what it's translating to on the ground for the ordinary home buyer and home seller. Something absolutely outrageous, which we look at in the second half of the video. But before we get started, if you're not already a subscriber of this channel, consider subscribing. Helps the channel out, and I appreciate your support. So expectations were sky high this morning for the July CPI numbers, with everyone watching, hoping, and expecting a continued deceleration in price growth to obtain confirmation that disinflation has begun. Well, like we've been talking about, that's not going to happen in the short term. Overall, the numbers did come in around expectations. Headline CPI, for example, rose 0.2% month over month as expected, the same as June. But what happened is this brought the year over year number to jump to 3.2% versus June's 3% number. So from 3% to now 3.2%, 0.2% increase. This is important, and what we'll continue to see throughout the rest of 2023. We pointed this out a while ago because June, folks, was the last CPI print that was benefiting from the year-over-year favorable effect, helping those year-over-year numbers appear much lower than they actually are. So like we said a few months ago, we'll begin to see headline inflation rebound. Like you see in this chart, this is the most up-to-date headline CPI chart. This is likely the start to a rebound in inflation, folks. You can see what's about to happen in these year-over-year comps forecasted by B of A, for example. But first, let's look at the current actual CPI numbers one more time. Check them out here. And this low point was from last month, June's numbers. Like we said a minute ago, June was the last month that was getting that favorable effect. See how high inflation was in June of last year, making it look like inflation is falling much faster than it is. But this ended in June. So what we're going to see, likely going to see going forward over the rest of 2023 is a rebound. These are the current numbers versus what B of A's forecasting, already falling in line with their forecast. And if you watched our last video, many of these big investment banks are forecasting now higher inflation in the short term as well. And that last video, we spoke about BlackRock, right? How they've begun to reallocate their portfolio outside of the U.S., focused primarily in specific emerging markets going forward. Emerging markets, by the way, that are benefiting from what they call geopolitical fragmentation that the world is seeing right now. Well, why are they doing that? What do they think's about to happen here in the U.S. in the short term? Well, check out what they say. Here's what they write in that August 7th report. All eyes are on U.S. inflation this week after softer than expected data in the last CPI print. We see persistent wage pressure keeping core inflation sticky. They go on to say, last week's U.S. jobs report for July clearly shows wage pressures are not abating, despite recent data raising hopes of U.S. inflation falling durably back to the Federal Reserve's 2% target. We see central banks being forced to keep policy tight to lean against inflationary pressures. This is not a friendly backdrop for broad asset class returns, marking a break from the 4 decades of steady growth and inflation known as the Great Moderation. And if you want to hear more about this, by the way, how BlackRock's ditching the U.S., good riddance, by the way, watch that last video. But the point's the same. As much as the media loves the narrative of disinflation, the truth is that's not happening in the short term. Getting back to 2% inflation maybe a year out, 2 years out. Hell, we've been hearing that shelter inflation, for example, would roll over since like last year. Has it happened? Not in your dreams, folks. This morning's CPI print showed something remarkable. Guess what made up the majority of the monthly rise in headline inflation? The largest contributor by far was, wait for it, shelter coming in at a whopping 90% of the increase. That's a huge percentage. Look at the overall shelter number, rent of shelter and owner's equivalent rent especially. And what's funny is we keep hearing that this number's about to roll over, that rents are falling. Well, when will this happen? We haven't seen it yet. Now, what does this look like at present, right? Like right now on the ground for your typical home buyer and home seller, it's absolutely brutal. Take a look at this. What we're looking at is our renting versus buying map with Zillow's most up-to-date home value and rental numbers and the Census Bureau's localized property tax and insurance data. What this should show, folks, is a neutral color. The majority of the county should be somewhere near the middle of this color code between green to red. The more red a county is means it's more expensive to buy a house than to rent a house. The greener a county is means it's cheaper to buy a house than to rent in said county. Well, what do you notice when looking at this map? Virtually the entire country is red, bright red, meaning from a strictly financial standpoint, it doesn't make any sense to buy a house right now, unless you're in Roswell, New Mexico, for example. But if you're literally anywhere else in the country, especially a major population center, take Seattle, Washington, for example. Check this out. King County, Washington, the 11th largest county in the country, your typical rental year costs $2,300 per month. But to buy your typical King County house, you're looking at $5,900 per month. That includes your mortgage, property tax, and insurance. That means you have a $3,600 monthly deficit if you choose to enter home ownership in the Seattle area. Or said another way, buying a house saves you negative 155%. And just to be clear, this is an anomaly, folks. This point in time that we're all living in right now isn't normal. The rent to buy ratio is supposed to be around neutral, meaning buying a house is supposed to be cheaper or equal to renting. There's usually an incentive to buy a house, a financial incentive to buy versus rent. Speaking strictly from a per month cost perspective here. Now take a look at this chart. We can see when this inverted, right? 2.5 years ago, right after the pandemic began, is when this line went vertical. And if we jump back over to the map here, we've been talking about how this will eventually even back out. And already, you'll find in the last few months, there are more affordable areas beginning to pop up. Well, let me rephrase that actually. There's more neutral areas where the ratio is beginning to even back out finally. One of them is the state of Florida. Now, 6 months ago, if we were to have looked at this map 6 months ago, Florida was bright red. Look at it now. And the reason is twofold. First, home prices are falling in Florida. They've been falling here for most of 2023. And the second reason is because rents are still so damn high in Florida. So it's actually making homeownership much more reasonable of an option versus renting than in like different parts of the country, especially out west. Still extremely expensive, more expensive now, in fact, than ever before. But when compared to renting, it's not that like out of whack like it was 6 months ago. Take a look at Palm Beach County, for instance, the 25th largest county in the country. Typical rental year costs $2,700 per month, but buying your typical Palm Beach County house is $3,300 per month with your mortgage, property tax, and insurance. That brings the buying deficit to only $600 versus Seattle, Washington's $3,600 monthly deficit, meaning buying a house here saves you negative 23% versus Seattle's negative 155% versus renting. Also, something to point out, there's been a ton of coverage about how insurance is going through the roof in the state of Florida, but so far, it's still fairly close to where it was back in 2022. That may be changing in the future, but thus far, we're not seeing that yet in the Census Bureau data. Now, personally, I'm not making this video telling you not to buy a house. I believe everyone should own their own home. The question, though, is this the right time to buy? Will it make more sense in 6 months or a year from now? I believe it will. Me personally, if I was in the market to buy another house, I would wait at least until the Fed reverses course and pivots next year, which is coming, probably another 9 to 12 months away. And the reason is twofold. It's not just about how much more affordable the housing market will likely be then, but also, more importantly, it's about selection. If you're buying a house for you and your family and you plan to build a life there, you want it to be a nice place, right? And it's not an understatement in the slightest to say that the difference between today's market versus a few years ago is night and day, folks. If you browse Zillow, for example, out west especially, for a $500,000 home today, you're looking at something like this, especially out west. This is a manufactured home listed for a $500,000. Look at the kitchen, folks. This is the craziness that you're buying into right now. But rewind a few years ago, you have homes like this currently listed at $840,000, when a few years ago, a house like this was your typical $500,000 home. So it's not about the money per se, but it's about the selection. Do you really want to buy into a market like this? Inventory, will return to the market. I can't tell you when it's going to, but my best guess is that we're going to start to see that begin to happen once the pivot begins. All right, if you enjoyed this video, got something out of it, press the like button. If you didn't, that's all right too. Press the dislike button. Either way, I appreciate you watching.